Nobody likes having a high interest rate on their mortgage, but that's the reality for almost anybody buying a house right now. But some people are taking advantage of a very little known strategy and getting a very low mortgage rate instead. They did this by assuming the home seller's mortgage. An assumable mortgage is where the buyer takes over the seller's existing mortgage. As you can imagine, the popularity of assumable mortgage has risen dramatically over the past couple years with high interest rates. Interest rates were on average less than 3% in 2020 for a 30-year fixed conventional mortgage. They peaked in October of 2023 at more than 8%. On a loan amount of $350,000, that's a difference in a monthly payment of more than $1,100 per month. In response to this, people turn to alternative ways to save money, including assumable mortgages. But two problems have come up with this topic. The first is that most mortgages are not assumable. Since conventional mortgages are almost never assumable, buyers have had to try to find low interest rate VA and FHA loans to assume. The second is that most people don't fully understand what it means to assume someone's mortgage. You still have to qualify for the mortgage. The servicer has to agree to allow you to assume the mortgage. VA sellers need to understand that their VA entitlement may be tied up unless the buyer assuming their mortgage is also a veteran. Their VA entitlement is what allows them to buy a house with a VA loan. So if they wanted to sell to buy, they might have to forgo another VA loan and purchase with an FHA or conventional loan instead, which could have less favorable terms. You also have to go through the current loan servicer and not the lender you may prefer to work with. Also, you're very likely going to require a very significant down payment in order to buy a house with an assumable mortgage. This is because home prices have appreciated a lot since 2020. Remember, if you're assuming the seller's mortgage, that also includes the current loan balance. It's the dollar amount that they currently owe. So unless the servicer allows you to get a second mortgage to cover some of the difference, you will be required to come out of pocket for the difference between the current mortgage balance and the sales price. In many cases, that's hundreds of thousands of dollars. And even if a servicer does approve you getting a second mortgage, the interest rate for second mortgages are typically higher than market rates for first mortgages. This partially negates the whole point of getting an assumable mortgage in the first place, but it may still be worth it. It's been a challenge for buyers to find assumable mortgages to take over. But now there's a new website called Rome. Rome allows you to browse listings of properties that have an assumable mortgage. It's basically Zillow, but instead of all properties for sale, it includes only those with an assumable mortgage. This is great because not every realtor or home seller will recognize that they have an assumable mortgage to offer. I don't think they have every market in the US on their site right now, but for those of you who are in markets they're hosting listings for, this tool is super useful for your home buying journey. On their site, Rome shows the properties for sale, what the estimated interest rate is, the monthly principal and interest payment, and the estimated down payment. Some drawbacks to this site, though, are that it's not going to be 100% accurate. There is simply no way for Rome to be certain of what the seller's mortgage rate is unless the seller tells them, so they may be estimating in some cases. It may also be the case that the seller isn't interested in allowing a buyer to assume their mortgage. If a seller wants a fast close or is a VA buyer themselves, they likely won't allow you to assume their mortgage. There's also this whole process where Rome says that they'll do everything for you as far as setting up the mortgage assumption for you and the seller, but I don't know anyone who's actually gone through with that experience. I suppose it could make the whole process easier, but you do have to pay their fee. As interest rates come back down, the popularity of assumable mortgages will decline. But for now, while rates are high, keep an open mind about the possibility of assuming the seller's mortgage. Did you like this video? Give me a thumbs up and subscribe to the channel for more content like this.